Hello everyone. If required, please pause and have a look. Before the ended outgoing week, for 8 straight weeks, Nifty closed on the positive note, and even on the outgoing week, Nifty managed to crawl above 25,000 mark for the first time on Thursday because of Fed Chairman's dovish speech about September month rate cut. But if you see the Thursday's our pre-market video, we did discuss about this one particular point. In the press conference, one of the journalists tried to get a hawkish statement from Fed Chairman, like, isn't it too early for the rate cut kind of? And immediately, Fed Chairman pushed back the question and said that if not now, then it will increase the risk of economy hard landing, etc. I mean, in olden days, for this kind of question, always Fed Chairman replied the decision should be based upon incoming of the subsequent macro data. But in this press conference, he pushed back the question, which on that day itself, market kind of sensed the recession fear, and that's the reason I also highlighted the questions on Thursday pre-market. Then after that, Thursday night, manufacturing PMI data contracted more than expected, which indeed started the sell-off cycle, like Dow Jones down near 500 points and Nasdaq also fell 400 points. All those details not new, we already discussed in the last video. In response to that, on Friday, only Indian and Chinese market fell by 1%. All other major market like Japanese index fell over 5%, South Korea index fell 3.5%, whereas Hong Kong, Germany and whole European stocks each fell over 2%, all disastrous. So we might think it's over, but it's not. The sell-off was further severe in US market last night. I mean, before their market opening, US government released the all July month's jobs related data. First, for example, the new number of non-farm jobs added in July month came as just only 1,14,000, which was way less than the both expectations as well as June month new jobs addition around 1,70,000. So in percentage term, the new jobs added dropped by one third, and it is the lowest value since Jan 2021. I mean, lowest value in the last 3.5 years. Hence, clearly, it's a very worst macro data. Second, another very important macro, which also comes as very much worse than the jobs addition, unemployment rate. I mean, the regular viewers of the channel might remember this. During May and June FOMC meeting, Fed Chairman projected the unemployment rate for this December year end expect to be around 4.1 to 4.2%. That now in July month itself exceeds, and the unemployment rate came as 4.3%. This is the very much real red flag, which indeed showed the economy deterioration. Again, obviously, this 4.3% was higher than the both analyst expectation as well as June month unemployment rate. So, in one simple sentence, after the bad US manufacturing payment data on Thursday, last night the jobs data came as very weak, which in turn increased the recession fear now. On top of that, both Amazon and Intel delivered a very bad quarterly results. So Amazon dropped around 9% and Intel dropped 27%. Hence, in the end, Dow Jones crashed over 800 points or down about 2%, whereas S&P 500 down around 100 points and Nasdaq decreased again another near 400 points. In addition to the 400 points, it dropped on Thursday night. Because of all this, in one single day, US VIX increased 26% and moved above to 23. So is it all bad? The answer is no. Last night, US market was too busy in having the fear of recession. Hence, it forgot to notice a positive thing. I mean, we all agree Fed is going to start cutting the interest rate in the upcoming September month. There is no doubt about it. Now, the question is how much they are going to cut. 2 days ago, according to the Fed rate monitoring tool, 87% chance they're going to cut 25 basis points. That after this bad US manufacturing payment data, that 25 basis point interest rate cut probability dropped to 72%. In turn, monitoring tool started to predict 28% chance Fed will cut 50 basis points in the upcoming September month. Then again, after this Friday crazy bad jobs data, the table was completely turned. I mean, now the Fed rate monitoring tool is giving 73% chance that Fed will cut the interest rate by 50 basis points. I mean, in the upcoming FOMC meeting, if Fed cut the interest rate by 50 basis point means then it's a huge positive, which market completely ignored last night. Anyway, that's all I want to convey about the US market. Now, how it all translates in the GIFT Nifty's price action. Most of us know at the end of Friday's spot market close, Nifty closed at 24,716. Here in the graph, the cursor point is the spot market end time. So at that exact time, GIFT Nifty traded at 24,730, meaning only 13 points premium. That itself kind of telling us how much the global momentum was bearish. In normal regular period at this day of the month, usually the premium should be around 100 to 130 points. 13 points premium is like not having the premium, so no time value. Anyway, as we see here, GIFT Nifty drop doesn't stop at the end of Indian spot market close. Then after that also it continued to drop additional another 200 points. But on the positive side, today early morning it managed to recover around 100 points. Hence for now, though the US market was disastrous, GIFT Nifty was not that bad and it's only indicating the gap down opening of 100 points. Then coming to Indian ADR, as it is, it also not good. Only HDFC Bank closed less than 1% negative. ICICI Bank and Infosys was down around 2.5% and Wipro was down almost 3%. I mean, clearly all the Indian area closed more negative than Indian market. However, let's look at the arbitrage value. I mean, if required, please pause and have a look. This is my ADR arbitrage table, and some viewers in the comment section asked me how I am calculating this. For that, quickly I'll show the relation behind the HDFC Bank calculation. Basically, as per HDFC Bank Investor Relation Database, one HDFC Bank ADR is equal to 3 ordinary shares of HDFC Bank in Indian market. So if we multiply this 60 US dollars with the Indian rupee conversion, then dividing it with number 3, then we will get this ADR's spot equivalent value. Hence here I converted all those 4 major ADR and the Reliance GDR to the spot equivalent. Then this arbitrage difference is basically the trading difference between those two market in rupee term. So as per that 1 to 1 for Monday, ICICI Bank has the negative arbitrage of 1.65%. I mean, just because the arbitrage difference is negative, it doesn't mean that ICICI Bank will open negative on the Indian market. Because the demand and supply of ICICI Bank share in Indian market is different compared to the demand and supply on the US ADR market. However, in the long run, both ADR price and the spot market with the currency adjustment will be the same. Anyway, enough about chit chat. As it is, ICICI Bank, Wipro and Reliance Industries all got the negative arbitrage of 1 to 1.5%. However, it's very difficult to judge for the HDFC Bank since historically foreign investors likes HDFC Bank very much. So 1 year ago, HDFC Bank got the ADR premium of 8%. 6 months ago, that dropped to 5%. 1 week ago, it further dropped to 3%. And at present, the arbitrage difference is only positive 1%. So Monday, if HDFC Bank regains the premium to 3% means, then either in Indian market, it has to drop 2%, or in US market on Monday, it has to gain 2%. If neither happened means, then there is no more ADR premium for the HDFC Bank. Overall, US market was down significantly, like crazy down. But in response to that, our GIFT Nifty was indicating only 100 points gap down. And in addition, most ADR indicating a negative 1% arbitrage difference. So that's the takeaway for now. Then the remaining other stuff we'll discuss in the Monday pre-market video. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.